Good morning. My name's Jon Hogge, and I am the Area Cereals Extension Educator for the University of Idaho. And today I'm going to share with you my grain market outlook for this year and for the coming year. The things we're going to talk about today, we're going to start with corn because it's king, and then move into wheat, and then talk about barley, and then give you some export market outlook and also a price outlook for the year. I want to start with our 2020 Idaho grain production and just look for a brief minute at what we did this year and compared to years we have previous. In our barley sector, the harvested area for barley was 500,000 acres, and it was actually down slightly, 6% from last year. Production, though, is right even with where we were last year at about 55 million bushel, and our average yield actually has come up to 110 bushels per the acre, which is an increase of 6%. Moving into the wheat sector, our harvested area is up slightly at 1,164,000. Production continues to increase, up by 14%. And average yields also on the rise this year, up at 10% at 96.7 bushels to the acre. Okay, let's just take a look at the global supply and demand of what's happening in the world today. As you look at this chart, I think it's important to see what happened in 17-18 and through the years. We were on a slight downhill trend, but as of this year, we have slightly higher ending stocks. And so we are sitting in a pretty good place as far as having enough material, but also it has a bit of a negative impact on the world because of the supply that's actually in the market. Okay, we want to take you to the WASDE chart for the corn market so that you can compare the last couple of years with where we are on track for this year. If we start with area harvested in million acres, we're at 82.5, which is slightly up on corn market acres. You have yield, which is really rallying close to where it was during the 18-19 year at 175.8. Beginning stocks at 19.95, which is slightly down from what it was previous years to this. And our production is rallying right in there with 2 year ago averages. Imports are at a slightly smaller range than they have been last year or the year before. And total supply is hanging right in there with years previous. The feed market, the food malting market, and export markets, as you'll see as we go through this presentation, are increasing, which is probably going to be the story that carries us forward as we move through this presentation. Ending stocks slightly down, and then average price as according to the November WASDE at $4. Okay, a very important slide to look at the 2021 corn market. Major exporters and importers. Let's start on the export side. Seeing a large increase in the United States, which percent change for exporting. We've seen a huge increase in corn just this year, which has been a huge boon to our society and to the corn marketing side and the corn growing side. A couple of the other top exporters, Argentina is slightly down by 10%. Brazil, another one that's on the increase of 14%, which is key to our markets. And then looking at the Black Sea region, the Ukraine and Russia area, both of those areas are down in percentages by shipping and exporting corn. So an important figure to look at. So if we go to exports by the top 5 major exporters, we're actually up 10% versus a negative 6% a year before. Now looking at top corn importers, this one is also really key to what's happening on the global perspective. Egypt is always right in there. The European Union is actually positive in nature. Japan, Mexico is up. The Southeast Asia is up by 7%. But the real key figure that I want you to look at, and what tells the story here, is China. Look at the percentage of increase of imports on corn in China, up 71%, which definitely tells the story. South Korea also up 0.9%. So the import demand by the top 7 major importers is up 9% versus a negative 1% last year. Okay, I wanted to give you a chart, kind of a bar chart and a line graph of what prices have done this year. There's some key features that I think are very important to look at as we look at what happened this last year in corn. And you can see that huge fall in the market in April, May. Of course, that was our COVID-19 crisis that definitely caused the market to decline. But there has been some very volatile changes that have happened. So this year is 33% change, or $1.06 per bushel. And that's an interesting and very amazing marketing opportunity. And to know that that wasn't just a fluke for this year, last year's numbers were also 24% change and $1.14 a bushel. So I wanted you to recognize that that was actually an important change, and the volatility in the corn market. And, we're on the right track as far as corn is concerned. Okay, this next slide I thought was important just so you can see the differences in the major crops that come out of the United States and compare, corn versus soybean versus wheat acres, and where we are with those commodities and how they are grown and exported in the United States. I think it's a great comparison, and to keep that in mind as we roll forward in this Outlook talk. Okay, so just closing the lid on the corn, we open up the wheat market and look at the November WASDE on wheat. Important changes that have happened the last 2 years. It's always good to update these charts and give you a projection of what's taking place according to that WASDE. Area harvested in wheat at 36.7, which is down significantly from previous years, which is one of the key components to where we're at in wheat right now. Yield in bushels at 49.7, which, every year we get better and better at producing wheat. It seems like our acreage goes down, but our yield increases because we become more efficient and better at what we do. Beginning stocks at 1,028. We still have plenty of wheat on the market. Production at 1,826. Imports at 125, which are really similar to what they have been, but kind of hovering in between numbers from last year and the year before. Our food market and exports, up slightly in our wheat department, and then our total use, which is up slightly from the past 2 years. And ending stocks at 877, which is down significantly from the last 2 years. And then our average price, according to WASDE, at $4.70, which is definitely better than last year, but not quite as good as it was 2 years ago. Okay, looking at the U.S. wheat situation, I wanted you to understand what's driving our prices. This chart gives you a kind of an understanding of where we are in our stocks to use, as well as our production. So the blue bar is our beginning stocks, the green bar is that production area, and then we have a very small segment of imports. But interesting to look at that domestic use, what we're able to use throughout the year, and then also where the price is hovering. And so I think this chart kind of gives you an understanding of what's happening in the United States currently. Now, this chart also is very important. I want you to recognize harvested area versus production and yield, and recognize that our acres are down again this year. It's projected that this year is going to be the smallest amount of wheat acres that have been planted in the last 100 years. So a significant upward trend is possible as we look at wheat acres and we look at supply and demand. But a very interesting chart to kind of indicate where we're at. Another chart that I think is important for wheat prices domestically, we can see early in the spring that COVID V that's in that March, April time period, and then we kind of were stagnant for a few months. But the last few months it's been pretty strong. There's been some indications that dryness here in the United States and dryness in other countries, lack of rains have driven those prices up and have kind of held them pretty steady. A couple of the classes of wheat that I think are significant, big changes in soft white wheat. That dollar has risen quite high on soft white and also on our hard red springs. Both of those classes of wheat have really strengthened as of the last few months and have stayed pretty good. You do see a dip at the end, and I think that dip as of into this month, into November and December, somewhat softening of the market due to COVID-19 and some of the challenges that are going to come from that. And so a significant chart that I think is one that we want to look at domestically and kind of keep our eye on where we're at with these different commodities. Okay, so I always love to put this slide in because I think it's important for us to look at what we do planting-wise by class. In our area, southeast Idaho, we do a lot of soft white. But, in other areas of the country, Midwest, we do a lot of hard red winter and a lot of hard red spring. And so I want to just kind of show you percentage-wise where we're at with our plantings by class in the country. Okay, another chart that I think is important to keep in mind is our U.S. ending stocks. And I love to look at these charts just so that we can see what has happened over the course of the last several years. You can see that dip in 12 and 13 when we had very little stocks on hand, and you remember the prices did really well during that time. But since then, because of that, as a reaction, the market started to increase acreage, peaking out, in 16, 17, and we've been slowly tapering off since then. And looking at 2021 with lower stocks and a positive outlook as far as the wheat acres are concerned. I really like also to look at these top 10 customers for U.S. wheat. Now, I put this chart up so that you could see the 5-year average of who's purchasing our wheat here in the United States. I think it's important to recognize our neighbors to the south being one of the largest, buyers of our U.S. wheat. Also, a lot of our wheat goes over into the Asia, so Philippines and Japan and South Korea and Taiwan. I think all these individuals are, purchasing, as much product as they possibly can, but are, a big boon to the wheat area as far as we can continue to move wheat along those channels. I think it's a very big benefit to, us in the United States. All right, so moving from U.S. wheat production, we want to look at the global outlook of what's happening worldwide with wheat production. I think this chart gives you a fair indication of where we're at as far as supply and use. So production being in the blue and that use being in that green bar, I think it kind of tells the story that other places in the world have a lot of wheat. There's still a lot of wheat in the supply chain. Other countries are really producing a lot of that product, and so worldwide we're in pretty healthy place as far as having the stocks that we need, and in some cases, too many stocks. It would be very favorable for us if we, had the ability to minimize some of those stocks, but at this point, it tells the story of what's actually happening. Another chart globally, I think this is very indicative of what's taking place. You can see the COVID V in the early part of the year, and then some strengthening of those global stocks. And I think those strengthening months was due to the United States having, poor projections for rain. I think Argentina was also lacking some rain, and so some of their projections were that they weren't going to have quite the product or quite the crop year that they expected. And so because of that, that started to drive price up. Another thing that I think is important is that speculators, because of low water years, I think those speculators also drove that price and kind of kept it coming up. The bar on the bottom, I just wanted you guys to see the comparison of where we were compared to other countries on where we're selling our wheat at per metric ton. That softening in November on that wheat market, I think, number one is due to COVID-19. I think there's a lot of projections out there of what's going to happen. The mask wearing and the closing of businesses, I think that kind of softened the market just a little bit. But we'll see here in the next month where we end up. So globally, I think it's a very good chart to look at to identify, where we're at worldwide wheat-wise. Okay, another chart that I think is excellent to look at globally gives us an idea of where we are with China and reporting their world wheat stocks. I think this is very indicative of the five majors of who's producing that wheat. We have the five major exporters being U.S. and Australia and Argentina and the Black Sea, which basically includes Russia, Kazakhstan, and the Ukraine. Very good chart to help us recognize where all those stocks are, with China being nearly half of reporting of what's going on and who has those stocks worldwide. Okay, a chart that I thought was very important for you to look at for global ending stocks and price. I think this is one of those charts where we can look at to find out where we are price-wise and where we're moving. Still showing that we have, the historical majors have a large portion of those wheat stocks, but the rest of the world is holding a lot of wheat as well. So there is still plenty of wheat out there, and at this point, I think prices are slowly moving, but holding fairly steady. But we're a little bit positive as to, U.S. wheat, as long as our exports continue to hold and we're able to move some of the supply out, I think we're going to be in pretty good shape in this coming year. All right, another chart I think is kind of fun to look at, and that's major world wheat importers. You can see the two different price charts, one from 1920 and then moving into this year, 20 and 21. Those prices blue to green. Egypt still is importing, a lot of wheat. Slightly down in Indonesia, but China, what a story. Look at how much wheat they're importing into China, which is, a huge boon to, not only the United States, but everybody that's growing wheat. Other than that, you can see that there's not a lot of change, except when we get down into Morocco and the European Union. They're also positive as far as importing more wheat. Okay, this chart is an example of what's happening exportable wheat supplies in those top countries. It's kind of a busy chart. There's a lot of colors here to look at, but I think it's a very good chart to look at to see who's exporting that wheat and how much they're able to put on the market, what's available to the world by each of these countries. That's a lot of competition for the United States. A lot of people, a lot of farmers in different parts of the country growing a lot of quality product, and as that quality increases, it makes it more difficult for us here in the United States to compete with those markets. Okay, price chart, just to give you an indication of where we are. This line graph showing some great volatility in the market. You can see those prices, how much they've changed over the course of the year. This year, 28% change, or $1.40 a bushel. And just to let you know that that's not just this year. Last year, we also had 19% change, or $1.07 a bushel. So a lot of volatility, a lot of opportunities if you have a marketing strategy. And if you don't, you ought to seek some counsel and figure out how you can capitalize on some of this upward trend in prices. Okay, looking at exporters and importers tells a little bit of a story. So top wheat exporters, United States changing 1%. Argentina's down. Australia, they're kind of back on their game. If you look at some of the things that have happened in Australia with weather, they've had some rains. They've been able to increase their supply. And of course, you can see from here that they're exporting substantial amounts of wheat out of Australia. Canada's up a slight percent. The European Union down 32%. Russia's up 14.5%. And Ukraine is actually down from previous years by 16%. So exports by the top 7 major exporters down 1% versus a positive 15% a year before. Now moving into the import side, looking at who's importing that wheat, Brazil is actually down by almost 7%. But once again, we look at China importing 48% increase on wheat. That's a huge benefit to our program here in the United States and a big plus for prices. The Middle East is up slightly by 2%, North Africa up by 7%, and Southeast Asia is actually down 0.4%. So import demand by the top 5 major importers is up 5% due to only 2% a year before. Okay, can't do this talk without looking at the dollar value. Significant change in value over the course of the last year. You can look at where we were sitting last year at $1.03 to where we are today, or as of last week at $91. So basically what this means is that the value of the dollar is softening, which enables other countries to buy more of our products and makes it easier for them to export more of United States product, wheat, corn, barley, soybeans, which is a huge benefit to us. And so I just wanted to show you a little bit of that softening of the dollar and the benefits that we gain from it. Okay, now moving into the barley market, wanted to show you the WASDE on barley so that you can be indicated of where we are versus this year as compared to the last 2 years. So in barley, we are sitting area harvested at 2.1, which is really kind of in there from last year and the year before. Yield at bushels per acre, also very similar in bushel to acre. The beginning stocks, slightly down at 80 versus last year at 87 and the year before at 94. So production is also hovering right in that same area. So slightly down from last year, but slightly up from the year before. Imports, same numbers according to the last couple of years. Total supply at 253, which is really similar to what it was 2 years ago. The feed and the food markets are all very similar. Exports staying at the same 6. And then total use is slightly down from last year, but up from 2 years ago. Ending stocks right in the same area, and the average price according to the November WASDE at $4.55, which is slightly down from previous years. Okay, coming back to the last slide as we look at the grain price outlook for 2021. These are some of the projections that came from the USDA WASDE, also from current Idaho prices. So let me take you through those. The market year of 2019 and 2020, you can compare those to 2018 and also 2017 prices. So we are projecting with some research that we've done, as well as digging in and trying to find prices from people that are making those guesstimates. Our projected price for barley is going to be at $4.75. Our projected corn price at $4, and projected wheat price at $4.80, which is slightly higher. And I'm here to tell you that the exports that have happened, in China, moving that corn their way and maybe moving some wheat their way, have been a huge boon to, our products here in the United States. So if we look at our current Idaho prices, dollars per bushel, soft white is ranging from $4.75 to $5.41. Hard red winter at $4.50 to $5.33. Dark northern spring at $4.98 to $6.34. Hard white winter at $4.70 to $4.99. The open malt contracts from $3.40 to $4. And I tried as hard as I could to find a contract malt price, but evidently that is not going to be happening price-wise until the first of the year. So I can't give you a contract malt price, but feed barley is hovering at $2.70 to $3.50. So to wrap up my outlook talk for this year, I just wanted to show you some summary of what we talked about. Our global and U.S. ending stocks have increased slightly. We still have a lot of product on the market, but those large stocks have created a little bit of downward pressure on price, but there's also been a lot of price volatility. And prices look pretty darn good for this coming year. Yields continue to improve. And then export is the story. As long as we continue to move product into other food chains and into feed chains that are anywhere in the world, our price will continue to be successfully on the rise. So with that, I will entertain any questions.